Let's welcome in our morning guest at this point of time. Shrikant Shetty is now joining us, as well as Ashish Chaturmoda is with us. We'll also have Sameet Chavan joining us. Ashish, let me start with you first. Before we go to your picks and what's happening in the mid-cap space, can you just tell us Nifty, Bank Nifty levels, what's happened in the last few days?
Hi Pankaj, morning. So if you look at, in terms of index, in last 4 trading sessions, we are in a very small range between 9400 to almost 9500 levels. Though, as you mentioned rightly that this is the expiry week, and despite that we are not seeing a significant activity in the market. Now markets will take a clear trend because, the way the call writing is happening at 9500 levels, it is getting difficult for markets to cross this 9500 market, and in case today or tomorrow if we don't see a clear move beyond 9500 levels, then that will lead to a lot of long liquidation happening in the index and Nifty based stocks. So I think we are going to trade in a range between 9400 to 9500, and once we see a clear breakout on either side, that will decide the tone of the market for at least till expiry. So in case if we see a breakdown below 9400 levels, that can lead to a profit booking till 9280, 9270 kind of levels. But in case if we see a move beyond 9500, that can lead to a huge short covering, and since we are seeing significant call writing happening, those call writers will come to cover up their position, and that can lead to a next move till 9600 to 9650 levels. So broadly, I think one need to be very watchful of these levels of 9400 and 9500 levels on a closing basis.
Right. In terms of picks, in terms of any ideas on the sell side, anything, Ashish?
Yeah, so I think pharma is showing a lot of weakness. Yesterday we saw most of the stocks trading near their 52-week low, or stocks like Divi's Lab has already broken levels of 600 levels, which was a multi-year support zone. So I think there we are seeing a significant addition in terms of short build-up, and technically speaking, these are the stocks which are breaking 52-week lows and yearly lows. So in that space, I think Aurobindo Pharma is one stock which is looking extremely weak to me. It has broken its crucial support of 600 levels after consolidating for almost many months. Now I think this stock has a potential to correct minimum to 10 to 15% from current levels. So one can initiate a short position in Aurobindo Pharma with a stop above 605, and on downside can look for a target of 525 in a short term. But I think the way the positions are being built up, this stock looks much weaker, and I think stock has a potential to even break 500 levels in days to come.
All right, Sameet Chavan is also with us. Good morning, Sameet. What are your top picks?
See, we have 3 buy calls. If we look at the Nifty levels, 9400 seems to be a very strong support, and in last 2-3 days we have already witnessed a decent recovery from those levels. So we are quite upbeat, and we expect 9600 to be tested on Nifty. So we would trade with a positive bias. Our first buy call would be from the PSU banking space, PNB. This stock has already undergone a massive price-wise correction from higher levels of 180, 185. But now if we look at the daily and weekly chart structure, 150 seems to be a very strong support. So this is the earlier breakout point. So we would expect this particular level to act as a very strong support, and from here on we expect a decent recovery in the stock. So one can buy PNB with a stop loss of 146. Our immediate target would be around 172, 174. Second buy would be on Dish TV. The stock is clearly in a process of forming a strong base around 90-92. In last couple of weeks, we have already witnessed a decent recovery from lower levels. We have already witnessed a decent price volume breakout from a multiple resistance zone of 100 last week. And in last 3 days, the stock has come off a bit from higher levels. But we believe that overall daily and weekly chart structure is quite strong, and the stock has a potential to move higher. 104, 106 would be a near-term target. So one can buy with a small stop loss of 95 on a closing basis. Third buy would be on Bajaj Auto. Clearly in last 3-4 days, the stock has come off a bit from higher levels. But if you look at the overall chart, 2900 seems to be a very strong support. The stock is now trading around its strong support level, and from here on we expect a decent bounce back. So one can buy with a stop loss of 2860, and target would be around 3080.
All right, 3 picks: PNB, Dish TV and Bajaj Auto. Shrikant, good morning. People are on the fence whether the markets are up or going down. What are your top picks for the day?
Yeah, I think the market has been sluggish for the last few days, but for ITC's gains yesterday, if you look at, the market would have been clearly on a negative. But we are remaining positive. I think the overall, at least in large caps, we think there is still room for select long positions there. So on stock front, we're looking at L&T from a trading perspective. We're looking at a target about 1810. That's from a trade perspective. On a more investment kind of view, I think one can look at financials wherein ICICI I think looks interesting from a medium-term perspective. So any declines, I think one can look at ICICI. In the media space, I think Z looks interesting. Post I think reasonably good numbers, and I think close to 500 levels. That's a stock which one can look to buy in from an investment perspective.
All right, liking the financials and ZTV for investment bets for the day. Those are the topics coming in from our guest.
Right. In terms of numbers, GAIL of course declared their numbers, and that will react to its numbers. 3% down was the move yesterday, and the numbers on the face of it are not looking that great. So if I look at the numbers, of course there is a big one-off over there, but even if you adjust for that, this is the adjusted PAT, as you can see, 1048. It's still not a great number. It's a number which is lower than estimates and a miss on most of the counts. If I look at the EBITDA front, I think that's a cleaner number to look at. So 1525 is what they have done. One would say on a YOY basis it's looking good. But 1800 is what the street was estimating. It was already down 3% yesterday. Let's see, what the reaction is today. That's the pre-open price indicating a 10 rupee decline. Miss was led by lower petchems as well as higher employee costs. Probably the only positive in the space was the petchem volumes, which saw some good, good bump up. Gas transition was also on the lower side. So overall, one can say that it's a miss. However, I think the management is yet to brief the analysts, the media, and that's why probably the street is just waiting as to what will be the sort of EPS cuts or what will be the sort of cuts that this company could see. Right now, most of the brokerages have given their view on the sell side, but at the same time not gone down and cut their estimates. Ashish, any view on GAIL? Do you think it's done pretty well in the last 2 years? Do you think it's still in a positive zone?
So yeah, Pankaj, it's still in a positive zone, because if you look at the stock crossed its previous all-time high, and after consolidating for almost 3 years, and now we are seeing some profit booking. So I think if it comes to 380, 375 zone, that will be area where there will be a lot of buying interest in the stock. So I don't think that this stock, so maybe another 4 to 5%, and I think there will be a lot of buyers. You'll see a lot of buyers coming into the stock. So I think 375 is reasonably a very strong support for the stock, and if it holds, then I think the stock has a potential to cross back 430, 435 levels in days to come.
All right, two more stocks will be in focus for the earnings they came out with. The first one, of course, is SRF, which came out with earnings which are in line with what the street was expecting. Revenue growth of about 20%, 1,416 crore rupees, and the bottom line growth of 15.5% at about 129 crore rupees. We saw EBITDA up 1.6% at 234 crore rupees. We saw margins slightly lower at 17.7% versus 20.7% in the same period a year ago. They had a high other income of about 26 crore rupees or so. For EIL though, the bottom line performance was less than inspiring. We saw revenue growth about 46%, but the profits were down 15%. EBITDA was up 9.3% at 54.2 crore rupees. EBITDA margins were lower at 12.2% versus 16.4%. Wanted to check with you, Sameet. EIL has had a very good chart. The performance of the stock has been very good as well. From here on, how would you trade it?
See, clearly in last 10 to 12 months, this stock has already given a stupendous rally from lower levels of 80, and it is now trading around its multi-year high. So obviously after seeing such a massive rally, some kind of correction or time-wise correction or price-wise correction was due in this stock. So what we believe that in last couple of weeks, this stock has consolidated in a range, and in last 3-4 days, we've already witnessed a decent correction. So we would expect continuation of this correction, but with a larger view, this would just be a pullback or corrective phase of the larger degree uptrend. So going ahead, 155, 154 is the level to watch out for, as far as support level is concerned. And on the higher side, 175 seems to be a very strong range. So we believe that this consolidation is likely to continue, and this stock is likely to remain within this range of at least 15 to 20 points.
Right, that's a view on EIL. One company that will be in focus will be Sun Pharma. That will not be because of Sun Pharma results. Sun Pharma declares its numbers on May 26th. That's in the next few days. You have Taro, which is a 30% subsidiary or a 30% contributing subsidiary to their EBITDA, which declared numbers. So dollar revenue on your screen, it is a decline. It was expected to be a decline, but it's still lower than what was estimated. Net income was expected to be close to $100 million. It came in at 83. YOY number, of course, is what you can see. In terms of margins on a YOY basis, there is a decline, but it was expected to be around 61, so they delivered about 54. So it's slightly on the lower side. Mostly, a high impact is seen as far as competition is concerned or pricing is concerned. Taro is approximately 30% of EBITDA for Sun Pharma, so that's essentially an important number. May 26th is when Sun Pharma will be declaring numbers. That's in the next few days or so. Ashish, you mentioned about pharma briefly. Would Sun Pharma also qualify as a weak stock?
So Pankaj, see, definitely there is a lot of pressure in the stock, and despite market recovery, we have not seen any significant buying interest in the stock, despite being one of the best loved and named stock in the pharma space. And I think that that clearly shows that there is a lack of buying interest. In anything negative comes in from the result side, then I think the stock might break the previous lows of 570, 580 zone. But as of now, I think the best stocks which are looking weak in terms of shorting opportunities lies at our Aurobindo Pharma and I think Divi's Lab. These two stocks looks very weak, and the kind of build-up we have observed in these stocks, I think the stocks have a potential to correct 10% to 12% from current levels.
All right, there are a few more stocks that came out with their earnings post-market close and will be in focus today. Godrej Industries came out with a profit of about 95.2 crore rupees versus a loss of 57 crore rupees, so a big turnaround coming in there. Revenues were up 7% at 1,982 crore rupees. EBITDA came in at 109 crore rupees versus 32 crore rupees, nearly 3 times higher. EBITDA margins also expanded strongly at 5.6% versus 1.8% in the same period a year ago. There was an exceptional gain of 50 lakh rupees versus about 83.5 crore rupees exceptional loss in the same period a year ago. That explains the loss perhaps we saw in the year ago period. Godrej Industries was up 2% a day earlier. CCL Products profits came in lower at 35.3 crore rupees. Total income moved up 12% to 297 crore rupees. EBITDA margins coming in at 64.2 crore rupees versus 60.9 crore rupees. Ajmera Realty came out with profits at 24.1 crore rupees. Total income also higher at 94.4 crore rupees, seeing a jump of about 26%. We had Sharda Cropchem. Their profits were down 1.6% and revenue increased to 13.7%. This is an agrochemicals player that will be in focus. Then we have All Cargo Logistics. Profits slightly lower at 57.2 crore rupees. Even the top line degrowing about 2%. But margins also lower at 7.7% versus 8.4%.
Right, Anisha, so all these companies are something that will be in focus in the next 30 seconds. You should get market opening in the next 30, prices for all these names in the next 30 seconds. GAIL, of course, will be the big one. Sun Pharma on the basis of Taro and all the other mid-cap companies that you just briefed us about. Our morning guests have focused on pharma, focused on housing finance companies. So let's see how do they react. What is the sort of reaction that comes in over there? It should start in the next 10 to 15 odd seconds. We should start to get prices. Nifty and Nifty levels will also be important. So in the last few days, you're seeing an opening higher, but it's unable to sustain at that level. Videocon is a stock which went down 20% yesterday, and I think there are news reports which suggest that it could go down further 20% this morning. So let's just see what the opening is. There are the first prices for you. Tata Motors results today 2 rupees higher. ICICI Bank 1 rupee on the lower side, 303. ITC was of course the top gainer in the last 2 days and maybe reacting slightly on the negative side. That's GAIL for you, down about 3 odd percent. That's 378. It was down 3.5% yesterday as well. ONGC 1 rupee here and there, and Hindalco is trying to open on the positive side. GAIL is of course now the top loser. It's down close to 2.7, 2.8. That's around 54,000 shares traded. It's not a very frequently traded counter, but with news flow coming in, you do tend to see a lot of volumes. SRF, decent numbers, inline numbers, it was mixed bag. 5 to about 6,000 shares traded, about 19 rupees on the lower side. That's EIL for you, 1.5% decline, 2.5 rupees decline, rather 1.5 million shares, close to 1 million shares traded. Sun Pharma is reacting on the basis of Taro, that's down 2.5%. Remember, it was a big miss as far as Taro is concerned, and that's why 2.6% lower. Godrej Industries, generally volumes are low, but today, of course, it's good in terms of volumes. That's because of results and results reaction that one is speaking about. CCIL products, numbers were a miss, 7% decline, 310 as far as CCIL is concerned. Remember, it's a stock which has done very well earlier, and that's why you're seeing this move on the lower side. Ajmera Realty, no major movement on this stock, 7,000 shares traded. Let's look at Sharda Cropchem. That's now also we can see for Sharda Cropchem, volumes are nothing. It's just about 1,000 shares in terms of volumes, and that's why 2% decline right now. All cargo logistics about absolutely flat actually, but volumes are decent. At least they are decent than what we have seen earlier. Anisha, any other names that you can pick up on the volume side?
Well, there are some stocks that are moving. Should pull up Aurobindo Pharma for you. That one is down 2.5%. Ashish said that he had a negative view on that counter, and he said that most of the pharma stocks looking weak, now down 3%, and volumes are also reasonable on this one. Indosolar is down 5%, Adani Enterprises is down 4.5%, Sun Pharma is down 3.5%. So pharma has been taken to the cleaners, it looks like. Bank of India is down 2% after a 10% cut coming in a day earlier. So on volumes, that one is also moving. Adani Power also down 2%. ITC coming in for some profit taking. NCC down 1.5%. India Cements down about 1%. So on the losing side, we are seeing these stocks with high volumes. On the gaining side, the volumes are high for Jet Airways, Sunil High Tech, IFCI, and Indiabulls Real Estate. These are some of the stocks that have seen high volume moves coming in this morning. Wanted to ask you, Shrikant, you said that hadn't it been for ITC a day earlier, the markets would have been weaker. How do you view ITC? Now we know the GST rates, nearly all of them, but of course we are still waiting for what happens to the those products which will be taxed at the sin tax rate. ITC has done well. It's at 300 rupees a share. How would you view this stock?
See, I think among the FMCG pack, if you look at valuations are rich, and probably ITC is a tad lower in terms of valuations, and the fact that GST is not leading to a increase in tax rates for ITC itself is a positive. So I think there can be still more positives from a near-term perspective for ITC.
All right, that's the view coming in that FMCG major. Ashish, today we're seeing the oil marketing companies buzzing. IOC is the biggest gainer, up on more than 1%. At a time when crude is, above $50 a barrel, there's an OPEC meet coming up this week. How would you approach the downstream players?
See, as far as oil marketing companies are concerned, we are positive on these stocks, but we believe that technically the stocks are in a consolidation phase, and it might take some time for them to really show a kind of momentum as a traders one expects. But definitely in terms of risk reward, most of these stocks are forming a good base, and we don't expect more than 2-3% downside from current levels. I think, but for momentum to start in, I think we really need good volumes and open interest addition, which is not happening as of now. So I think as of now, we should wait and we should allow these stocks to settle down, and let's see how the open interest starts getting add on in these stocks. But two stocks which are coming to my focus is, one is L&T, which is looking very strong. Technically, the stock is giving a breakout after 4-5 weeks of consolidation, and I think the kind of open interest we have observed in last 2-3 trading sessions, L&T is one stock ahead of results which looks good for 5 to 7% upside from current levels. So one can initiate a long position in L&T with a stop below 1745, and an upside can look for a target of 1830, 1840 levels.
Right, Ashish, you mentioned about pharma names. I think some of them are opening down. So could you just revise your level maybe for Aurobindo Pharma or the pharma index, the downside that you have? What's now the call from here on at these levels?
See, as we discussed about Aurobindo Pharma, we gave a target of 525 in short term, but as I mentioned, technically speaking, these are a very weak structures, and generally, whenever we see a kind of, this kind of breakdown after consolidating for many years, generally the stocks are in a broader degree downtrend. So I think technically speaking, Aurobindo Pharma has a potential to break 500 mark and can touch somewhere around 480, 475 zone in days to come. But in a shorter term, 525 is a level where I think short traders would like to book some profits and wait for a further opportunity. In case if the stock sees some uptick from those levels, again it will become a good shorting candidate. So broadly speaking, a level below 500 is quite possible in Aurobindo Pharma. And in Divi's Lab, as we discussed, this stock has already broken 600 mark. We have seen a good amount of short build up. So I think Divi's Lab is one stock which looks good for 530, 540 levels.
Right, but overall pharma index continues to look weak. It's been one of the big underperformers. Still, you think it can underperform?
Yeah, definitely. See, so you remember those days, when everyone used to talk about that, okay, SBI has corrected 20%, now it's a time to buy in, but it never happened. These stocks corrected almost 40%, 50%, 60% from their tops, and most of the mid-cap, banking stocks, they corrected even 70%. So you never know. So unless you don't see a clarity, it's better to stay away. And if you are aggressive traders, then take a punt on the short side. Rather than taking a long bet on these kind of stocks.
Right. Ashish, any view on Videocon? Only if you have, because volumes have just spiked in the last few days. So only if you have a view, you could give us.
See, so generally this kind of stock doesn't come into our radar, and when the stocks are trading at a 52-week low or all-time low, and after consolidating for many years, they are still trading at multi-year lows, then it becomes a case of a clear downtrend. So in the same category I put Arcom, because if you look at Arcom, this is one stock, despite being into the F&O, we have never seen the stock crossing a good breakout. So I think these stocks will correct, and I don't know where it will stop. So like JP Associate, I remember those days when I used to recommend JP Associate short since 80, 70 levels, and everyone used to ask at every 10% downside that whether it's a good buy, but technically we don't get any signal. So I think these stocks might see correction. Arcom, I think, has a potential to go below 20 levels. Videocon, you might say stock going below 50 levels, 45 levels. So you never know. So it's better to stay away or take a punt on on going long on these stocks.
Right. Shrikant, what will be your call on names like United Spirits, ITC, which have done they've been very volatile because of GST. What will be the impact of that on the company? Can you just tell us that? What will be your view on these two names?
See, as I said, ITC, I think the fact that the GST tax does not increase the tax levy on the company itself is a positive. So I think, and within the FMCG pack, given the valuations are rich valuations, I think ITC kind of features in a slightly lower valuation. So I think there is room for upsides in ITC. So I would prefer ITC. United Spirits obviously is there are a lot of regulatory regulation related issues going on. So we need to see how things play out. But from a long-term perspective, I think it's a great business franchise. So one can probably stay invested from a longer-term perspective. From a near-term perspective, there are a lot of uncertainties in the horizon. There probably will be margin pressures. Profitability might not be great in the near term. And if the expectations are that margins will improve going ahead, but then that might be prolonged. I mean, that might take a bit longer than expected. So with that possibility, I think in the near term, one would want to be careful with United Spirits. But from a long-term perspective, we remain positive on the franchise.
All right, Sameet, what would you do with some of the IT names? Today, HCL Tech is the top gainer, inching towards 900 rupees a share. What's your view on HCL Tech, Wipro and TCS?
See, if we talk about the overall IT space, we have already witnessed a decent recovery from lower levels in last 3 weeks. If we talk about the levels of HCL Tech, yes, it has given a decent recovery from lower levels of 800. So we expect continuation of this upward traction. The stock is likely to head higher towards its recent peak of 880, 885, which is likely to be tested quite soon. On the lower side, 830 seems to be a very strong support. So we would expect all these IT stocks to gradually move higher. We may not have a strong momentum, but we expect them to trade with a positive bias, and they are likely to head higher gradually from current levels. As far as TCS is concerned, we have already witnessed a decent recovery from lower levels, and the stock is now trading around its recent peak. So we expect continuation of this northward rally. This stock has a potential to move higher from current level. At least 4 to 5% upside is quite possible. So one should trade with a positive bias. Minor dips, minor intraday dips are likely to get bought into. So we would expect all these stocks to do well at least in next couple of weeks' time.
All right, Sameet, PNB was a pick from you. It's down about 1%. State Bank of India has come off from lofty levels of 315 to about, sub 290, and Bank of India has seen a very big cut. What are you seeing for these three PSU bank stocks?
No, clearly for PNB, this is a directional call, and with a broader perspective, we expect 150, 146 to act as a very strong support. So we would still believe that this is a very good buying opportunity as far as direction levels are concerned. This stock has already witnessed a massive correction from high levels of 180, and if you look at the overall broader degree chart structure, a couple of months back, this stock had witnessed a decent price volume breakout from a level of 146, 150. So it has come off a bit from higher levels, but at, earlier breakout points, which was around 145, 150, is now likely to act as a very strong support. Yes, we would expect some kind of volatility in this stock, but if you have a medium-term view, then this is a very good buying opportunity.
All right, buying opportunity for PNB. Shrikant, what would you do for some of the cement counters? They've come off very sharply as well. ACC, Ultratech, even India Cements is weakened. Do you think this presents a good buying opportunity?
I think if the markets are correcting, if there can be a little bit more correction in cement stocks. I mean, these cement stocks have seen a decent run up, and in terms of valuations, they probably are closer to fair valuations kind of thing. So if there is a correction kind of mode in the market, I think one would want to wait and watch. Though as a sector, we do like cement, so one would want to be biased on declines. But I think there could be more declines before we see some stability in valuations, because most of them are trading at reasonable valuations currently.
As we are speaking, markets have corrected quite a bit, and it's not markets particularly, it's about the broader market space that has corrected quite a bit, and some of the companies that also declared numbers are correcting now. So let's just pull up United Spirits once again. It's about 5.5% decline now. Very, very volatile move. So on Friday, it was down 6%. Yesterday, it was up 5%. And today, it's again down 5.5%, 6 odd percent. You have a SRF, which is down 5%. That could be a results reaction. But, the numbers overall on the face of it were not looking weak. But, maybe there is some investor who really did not like the numbers. That's why 82 rupees decline for this name. Sun Pharma is down about 5 odd percent. We focused about Taro, what essentially has happened over there. So that's down 5%. Gale is reacting to numbers. That's down 4.5 odd percent. Aurobindo Pharma continues to be very weak, 4.5, 4.8% in terms of decline, 547 for that name. Bank of India, second day in a row is down. It's down 5.5% right now. So that's the sort of cut that you're seeing on Bank India at this point of time. You have EIL, which is reacting to numbers. That's down 3 odd percent. Arcom is down 3%. And, the list can just go on. So there are a lot of names that are, right now looking in extremely weak. Ashish, you look at the derivative space as well. Could it just be because of expiry, or there is some genuine selling that you can see in terms of volumes?
See, Pankaj, if you really look at the market, last 3-4 days, markets were trading in a very narrow range. But if you look at the broader constituents of markets, most of the mid caps were seeing a correction from the range of 5 to 8%, despite markets remaining at a same level. So that was a clear sign of distribution. And last week I was in a show, I was telling that there's a clear index management which is going on in the market, because most of the stocks, which were showing amazing strength, like PSU banking basket, the way the stocks have seen a build up on the long side, and the kind of liquidation which we are observing in the last couple of trading sessions is a clear indication that there is a clear distribution going on in the market. And I think the chances of Nifty, breaking 9400 and then testing 9280 is looking very, very strong, because the kind of build-up we are observing in most of the frontline names is indicating that we might see some profit booking from in days to come.
Right, and also because this is coming after really a long time, such a deep correction in some of these mid-cap names, people are sitting on profit, so even if it's 10% down, people would get scared and actually book out.
Yeah, I think so. See, obviously, after a long time, people have made some money, and most of the stocks have participated quite well. So obviously, once the market starts breaking 9400 level and sustaining below that, there will be a lot of profit booking call which will be taken by most of the traders and investors, at least in a shorter term. So I think that can lead to a fresh amount of weakness in the market. So I think in the near term, we expect markets to see some amount of profit booking from current levels, and particularly in stocks which have risen very well in last couple of weeks or months, they will see some significant profit booking from the current levels.
Right. Shrikant, what will be your call on the entire pharma pack? What do you think is happening in the pharma pack? You think investors just don't want to own this sector right now?
Yeah, it does seem so. If you look at, obviously the news flow remains negative. I mean, in terms of various stocks, stock specific, whether it's FDA related, whether it's local regulation related news flow. So most of this has remained negative, and unless we start seeing some change in that the news flow, or because most of the pharma plays tend to be more individual stock specific stories, and we have not seen any specific positives coming through for the large companies, whether it's Lupin, Reddy's, Cipla, or Lupin, or Sun for that matter. So all the big names have suffered from either FDA related issues or something else. So clearly there has been negative implications, and the numbers in terms of growth outlook wise, the expectation is not that great. So near-term expectation is limited, and I think the valuations are coming off from the highs, which was earlier, when the expectations were very high. So clearly there is some come off coming through, and now that stocks are correcting and underperforming and seeing weakness, there could be some more on account of that, where people would not want to hold it, or maybe trim positions where they have excessive positions in pharma, which have held as a defensive place. But since they're underperforming, one would be probably looking to trim that off. But from a more broader perspective, from a more longer term perspective, we are more sanguine on pharma. We think these valuations are pretty reasonable now. So we would be looking to buy into the declines into the large cap names.
Right. Just a word on Havells. It's down 5%. I think GST rate, of course, was slightly negative versus estimates. But what's your call on Havells? It's a great business to own.
It's a good business to own, a great business to own. I mean, the numbers are also good, but as I said, again, valuations are, priced to perfection out here. So even slightest of negative, slightest of profit taking can lead to stocks being lower. I think the entire consumer durable space is fairly valued, and the growth to a large extent is priced in from a near term perspective. So corrections can come through in this space.
Right. Ashish, just a word on these consumer durable. They've had a great run. Do you think these are first signs of correction?
So see, obviously most of these stocks are in a stronger, uptrend, and I think there can be profit booking, because obviously they have seen the most, price uptick in last couple of weeks and months, particularly stocks like Havells, Voltas, Blue Star, Bajaj Electricals, and there we might see definitely, as I mentioned, that stocks which have seen a stronger rally might see significant profit booking. So in case the stocks see a correction of 10 to 15% from these levels, I think that will be an area where one should start accumulating these ideas, because they are in a structurally broader uptrend, and I think there, if you start building up the position, I think the first uptick will start happening, or the first uptrend will start happening in most of these names. So I think one should be watchful of stocks like Havells, Voltas, Blue Star, Bajaj Electrical, where I think any dip of 8 to 10% from current levels will be a great opportunity to go along in.
Right. Thank you so much, gentlemen, for taking out time for us. Always good to get a perspective. Just before we go, Shrikant, let's start with you. Any disclosures?
None of the stocks, I'm holding none of the stocks which we discussed, but our clients could have positions in the stocks which we discussed.
Ashish, for you?
Few of these stocks we have recommended to our clients. I do not have any personal holding in any of them.
Sameet, for you?
I don't hold any of these discussed stocks, but our clients might be having positions.
Thank you so much, gentlemen, for taking out time for us.